Hi students, Namaskaram. Now we are solving another practical problem in the chapter Computation of Total Income, that is Assessment of Individual. Dr. Goyal retired from government service in 2018 and took up a job with a company thereafter in Delhi. The following are the particulars of his income: pension from government, salary from company, unfurnished rent-free bungalow, half share in a firm, dividends, interest on government securities. He had loan of rupees 25,000, out of which rupees 12,500 was invested in shares and balance in government securities. Interest payable on the loan at 12% per annum. He had purchased a shop in 2000 for a sum of rupees 80,000. Its market value on 1st April 2001 was rupees 1 lakh. It was sold for rupees 7,89,000 on 1st November 2019. He gave donation of rupees 10,000 to Prime Minister's National Relief Fund by check. Computing his total income. Let us solve the question. He received a pension from government, rupees 3,40,000. Pension is fully taxable as salary income. Pension 3,40,000. Now we are computing income from salary. Salary from company, basic salary. It is also fully taxable. Basic salary 3,60,000. Unfurnished rent-free bungalow is provided by the company. Unfurnished accommodation. In this case, 15% of the salary is the taxable value. The value of the accommodation is equal to 15% of salary. This house was formerly let out at rupees 6,000 per month. This sentence is not to be considered. This accommodation was formerly let out for rupees 6,000 per month. This information, this sentence is not to be considered for the computation of income from salary. The house which was provided to the employee by the company was formerly let out at rupees 6,000 per month. It is the fair rental value. It is not to be considered. Accommodation. The value of the accommodation is 15% salary. Here there is only basic salary 3,60,000. Therefore, value is equal to 3,60,000 into 15 by 100, rupees 54,000. Accommodation rupees 54,000. Add these three items, we get gross salary. From gross salary less deductions under section 16, standard deduction rupees 50,000. Now we get rupees 7,04,000 taxable salary. 7,04,000. Half share in a firm rupees 15,000. The share of profit from a firm is taxable as profit or gains from business operation, but it is exempted. It is an exempted income. Share of profit from firm. It is a business income, but it is exempted under section 10(2). Therefore, share of profit from firm nil. He had purchased a shop in 2000. Now it was sold for rupees 7,89,000 on 1st November 2019. The shop was purchased in 2000 and was sold on 2019 after 2 years. It is long-term capital asset. We have to compute capital gain. This 7,89,000 is the sales consideration, that is full value of consideration. Computation capital gain, sale consideration 7,89,000. We have to deduct indexed cost acquisition. The shop was purchased before 1st April 2001 for rupees 80,000. If an asset was purchased before 1st April 2001, as per law, for the computation of cost of acquisition, we have to compare the actual cost with the fair market value as on 1st April 2001. Whichever is higher is the cost of acquisition. Here, the asset was purchased for rupees 80,000 and its fair market value as on 1st April 2001 was rupees 1 lakh. 80,000, 1 lakh. Whichever is higher, it is the 1 lakh. 1 lakh is the cost of acquisition. Then deduct indexed cost of acquisition. 1 lakh into index for the year 289 divided by index for 2001 to 100. We get 2,89,000. It is the indexed cost of acquisition. Deduct it. We get long-term capital gain, rupees 5 lakh. It is the capital gain. Then in the question, there is dividend. We know dividend is taxable as income from other source, but it is exempted. Dividend nil because it is exempted income. Interest on government securities. It is taxable as income from other source. 2,000. He had a loan of rupees 25,000. Out of this 25,000, 12,500 was invested in shares and balance 12,500 invested in government securities. Total amount of loan 25,000. Out of this 25,000, 12,500 invested in shares. The income from shares is exempted, therefore ignore it. The balance of 12,500 is invested in government securities. The interest on government securities is taxable. Therefore, this interest on loan of rupees 12,500 is to be deducted. 12,500 is invested in government securities. From interest on government securities, we have to deduct the interest. Interest is equal to 12,500 amount invested in government securities into 12% per annum, 1,500. Deduct interest on loan, 1,500. We get rupees 500 income from other source. Then compute total income. Now we have income for salary 7,04,000, profit and gains of business and profession nil, capital gain long term rupees 5 lakh, income from other sources 500. Add these items, we get gross total income 12,04,500. Less deductions under section 80. Here he gave donation of rupees 10,000 to Prime Minister's National Relief Fund by check. Therefore, he is availed deduction under section 80G full amount without any maximum limit. 80G donation to Prime Minister's National Relief Fund 10,000. Now we get total income 11,94,500. So thank you.